Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on the gold. So gold currently stands in exceptionally interesting environment. So we have touched today in the weekly report really huge topic of what stands behind the gold drivers, how we should treat this news about the Omicron appearing, how it will last, what the aims stand behind Omicron and the pandemic in general. So briefly we have touched the one part of the subject yesterday in our Forex video, when we have shown that the overall pandemic and why in general masters are interesting with the lasting of the pandemic as long as possible, or at least the major targets will be achieved. We have shown only the one part of this puzzle in recent video when we discussed the cost of the delivery of the Chinese goods in the United States and United States goods back in China. And you can see that direction out of the China is 36 times more expensive than in opposite direction. So all these events are not occasional, and everything has some reasons why it is falling. And the Omicron, interest rates, Fed policy, and bottlenecks in the supply chains, all these moments actually the parts of the same chain. So, and we have tried at least briefly to explain what's going on currently in current weekly report in the gold market. Also, this is a trend to the ecology, the struggle with the carbon, with the turning to the green products, ecological food. So all these trends have the same target, sexually. So it's a very low relation to the climate, actually. So, but this is really very long-term theory and long-term discussion. So if you're interested with that, just read the report. Speaking on the shorter term, our basic suggestion is that gold should remain on the surface. And we do not expect that gold turns to some collapse in the nearest few months, because the major driving factor, whatever stands behind of it, is the real interest rates. With the huge inflation and with the first rate change from the Fed, that's expected to be only on the summer 2022, the real interest rates promise to be in very low levels. They should stand in the negative territory. And if you'll take a look at our famous chart that we usually are taking a look at it, so this is gold price, this is real interest rates, the 30-year Treasury Inflation Index security. You could see what has happened in recent action, and then Macron appearing and so on. So rates have dropped. After minor pullback, it's keep dropping lower. So that will be supportive to the gold market in the medium term. So we suggest that gold really has the chances to form something bullish at some support, because currently we see different contradiction between the gold performance and interest rates performance. Later I will explain why it happens, but soon this divergence should be fixed and gold should turn to the upside again based on this actually performance. This is what about the real interest rates. Even if you will take a look at the nominal interest rates, take a look what's going on here. This is weekly chart, guys. This is not daily. On the daily, if you remember, we talked about this. This was said. If you remember, we were considering this ABCD type of action, and we said this market shows really fast acceleration. Market could exceed action to the XOP with this ABCD downward action. Market really could start dropping lower, providing more support to the gold as interest rates are dropping. On the weekly chart, this actually gives us really big consequences, because initially, if you remember, we also talked about the Hannon shorters, and we said market should turn up here without any further dropping to keep interest rates on the bullish side, the moving higher only in this way, that could promise the gold to drop more. But in reality, you could see that action stands in opposite direction, and that really could lead to the failure of the hand shoulders or more extended right shoulder at least, which also will be supportive to the gold in the nearest term. In general, this strong collapse just tells that we could get this ABCD pattern. Gold interest rates could keep going lower before maybe situation will change, and this is definitely a supportive factor for the gold. Now about the second question, why we see simultaneously the drop on interest rates and we see drop on the gold market as well this recent week, although Consumer Friday it was a nice rebound. Mostly because on this week it was run into the cash. It was not demand purely for a safe haven, but it was run into the cash, mostly in the dollars, and putting them inside, putting them into interest rate products such as treasury bonds and notes. As a result, the sell-off have touched the gold as well, although this is not the risky assets, but some position contraction, as you could see in recent Committee of Traders report, has happened here. But that was not the reason for that was not some weakness in the gold per se, but it was just a common trend that touched briefly and slightly the gold market as well, although it should not be touched in long term. And this mismatch, we think, should be fixed in the nearest time. The real victim of this recent sell-off you could see on the Bitcoin that has dropped to the 30% approximately, which just shows you what the place it takes, and it explains that all talkings about that the Bitcoin is a rival to the gold, alternative to the gold, and this is a safe haven asset. This is not true. This is second quality risky assets because it has dropped for the 30%. It's much stronger than any stock market has dropped. S&P has dropped as well, as you can see here, but this drop was not as strong, and actually Friday too showed some minor rebound. So with this running into the quality, we think that Omicron topic is for a long time to us. After the Omicron will be Gamma, Delta, Alpha, or whatever. And this topic will not be over until some geopolitical targets will not be achieved. This is not for the short term. And this run into the quality, run into the safe haven assets should continue. So we think we see really difficult times for stock market ahead, especially with a more hawkish statement from the Fed. For the gold, with this, as we said, depressed real interest rates, we think that gold is able to show some bullish context in the nearest time. Maybe we will not see the big rally, but at least gold should stay on the surface and from time to time start forming some bullish short-term stops. So what we're watching currently. Here we already have some sign in the shape of the bullish engulfing pattern that mostly is formed near the support area that we have predefined. So actually last week we were watching mostly for the downward continuation, and we said we will be watching for major support, see what response will be, and whether the market will form any bullish factors. So any bullish signs. So currently we stand very close to this moment. If you will take a look at the 4 time frame chart, you will see that market has shown the pullback here, but our major targets will not be hit. So market leaves behind COP with this ABCD pattern, or maybe we could suggest that maybe COP has been hit if we will use, but even with this tighter 8 point, it has not been hit. So anyway, this target has been left behind, and butterfly target has not been achieved as well. This makes overall short-term situation a bit tricky. And in the current situation, we have to wait. Either this market has to form something really bullish, and I think that at least we should get bullish reversal swing. So if market will jump above 1795 and starts to form here minor hand and shoulders pattern, that may be, in this case, we could forget about these targets and be focused on purely on the new bullish behavior. Or we should wait. If this will not happen, market will not form the bullish reversal swing and will not move above the 1795, In this case, we should wait for another downside spike, downside action, because previously we already saw this kind of the pullback. And I would suggest that probably we've got something harmonic. So if we'll take a look at this pullback, it's mostly very similar to this one and very similar to this one. And currently, as you can see on the hourly chart, actually we have nothing but catalyst triple to sell pattern around local 618 level, which is very difficult to call as a signal for taking the long position. So that's why our suggestion, we are watching either for upper continuation, taking out of this top and forming some kind of the hand and shoulders here, right? So in this case, we could start thinking about taking long position again, or if this will not happen, we're waiting for another drop, reaching of the 1755, 1760 area, and then watching for patterns will be formed around 1760, because overall environment with the rising rates, talking about with the more hawkish Fed and strongly negative interest rates performance, this is the combination supportive to the gold, and running into the safety is also supportive to the gold. So that's why we think that around 1760 we have not bad chance to get something bullish.